Let me ask you a very simple question. What is wrong with your trading? Now, I think you should take a little moment to think about it. Pause the camera, drop it in the comments and say what I think is wrong with my trading. And then I'll tell you what I think. So, you done that? Excellent. Now, I'm pretty certain a lot of people are going to say, well, I can't find the direction. Can't get my entries correct. Let's see what else. Don't know where the levels are. And I constantly keep getting stopped out. Things like that. Okay. But I bet the one thing that doesn't crop up is target. Now, what is target? Well, target is an expectation. Expectation of what you want, but it's also an expectation of what the market is willing to give. Now, I did an exercise last month. Let me flick this over. June. I might put this into a thing where I started with 100 quid and I had 3 targets, but each one had an expectation. I wanted to achieve basically £1 a day. All right. So I had a target here as £1. It has adjusted, and I'll explain why in just a second. But it was £1 a day. A target here based on a pip count, and then a day target based on an overall expectation, which was a percentage. And this target was what I was mainly looking for. But if I hit that one or I hit that one, I was fine. So my expectations were always in check. Case in point. If I'm doing the exercise again, which is why this has changed, but following that expectation, I drew out 74.61. Now you saw me do it and I put it in the wallet of my BlackBull account, okay, which is there. All right, 74.61. I don't need the money, so I've just left it there. All right. So the plan is, well, I'll just carry on for a little bit because I'm going on holiday in sort of a week and a bit's time. I just thought I'd carry it on to get a bit extra spending money. So that's what I'm doing. So let me explain the target. So my expectation each day at this moment in time, this is why it had grown up, is 461. Now, based on my expectation, the target has now become, as you saw on the other sheet, 145 a day. So I'm looking for a minimum of 145. 348 is the 15 pip. And then 450 is the growth. So it's here. So this is what I'm working on because I'm on day 8. So it's 449. I rounded to the nearest 10. 450. All right. I've achieved that easily today. But was it easy? Well, let's have a little look, shall we? So if we pull this up before I show you sort of the statement, what you'll see is there was an exaggerated candle here at around 9 o'clock. Came from nowhere, wasn't on the economic calendar. But what it did do was show something that I already knew, which is a Kylie retracement. That came in, paid me quite well. Then I decided to sit back and wait because once the news has settled down, it'll go back to normal service. Well, what's normal service? It's where your levels come in. Bang, bang, straight down to the pip, then continued its journey back to the level and then back across, giving me these trades here. They can't all be winners. You've got to kill and sacrifice some off. Now, if I went back in time, there's that 100 quid we originally started with. And then you just work your way through it. You just keep on going, bish, bash, bosh, 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 all the way down. See, don't get it right all the time. Sometimes you just got to kill the things off. And you just keep on going all the way till eventually you come back to the present day. Or at least you will do. Christ, I've done loads of trades. As you can see, we're keeping on going, keeping on going, keeping on. Fucking hell. Right, come on, boy. Down you go. So there we are now. 207 is where we're at with a balance now of 230.66. There's a 74.61 withdrawal with the original £100 deposit. Now, what I'm driving at with that is it's methodical. I know what my expectations are, but I also know what the capabilities of that chart is. Now, I only really do pound US on that. It's predominantly that. There's a bit of Bitcoin and maybe there's a little bit of Euro as well. But I'm sticking with pound US simply because it's secondary to what I normally do, and I don't want to spend a lot of time on it. But the strategy that I use is the same. I use three. I've got a surge, I've got a Kylie, and then I've got a golden eye. Golden eye is actually all of it. Surge is just the burst on the morning from the open, whether you're taking it from 7 o'clock, 8 o'clock, whatever. And then you've got a retracement. Now, a retracement is overextended candles and you're running back to 50%. Now, I know what the capabilities of each one of them are, so I'm pretty solid with what I'm doing, which is why I say trading's a piece of piss. But they would fall down. So for argument's sake, you have a retracement and you're retracing it into the 50%, which you know is the max. Well, what if you target 76, the level above it each time? What if the market isn't willing to get that high? You would have still had a great trade at 38.2, a very good trade at 50, exceptional if it could get up to 76.4, but the expectation is it won't do it. So what you've really done is you've pushed the boat out and you've exceeded the expectation, which means it fails. As soon as it fails, you go, well, this is shit. It can't be anything but the strategy. I'll change the strategy. So you do the next strategy. And it might work a bit. Then it falls off the cliff. Because you're not putting into place the one thing you should be, your target. Your target dictates the trade. Now, if you're going for the fabled RR, I'm not a fan of RR. I think it's stupid. But I come from a business background. I don't come from what you see. I don't watch any trading channels at all. You know, I used to, and they used to just annoy me. You know, TikTok and the land of make-believe on Instagram, all that sort of shit. It's bollocks. All bollocks. Because it's very easy to predict a trade retrospectively and say, well, I only had a 5 pip stop and I got a 200 target. I could do that every day if I know what the outcome is. But we don't. We deal in the moment. So if you look at an Elliott wave, you don't know it's an Elliott wave till it's an Elliott wave. You don't know it's a head and shoulders pattern till it's a head and shoulders pattern. All of these things. So retrospectively, they're amazing. In the moment, they're not. But there are constants on the chart, and that's your levels. Your levels will tell you where the target is going to be. And then there's levels inside of levels with Fibonacci. That can help you because they're mathematical. But if you overstretch your chart, you fail before you start. So the system isn't at fault. They all work if you know when to use them. But your expectation has to be correct on all of them. Every single one. And if it's not, you'll be chasing your tail forever. So pay attention to your target. It's easy to work out. You can go level to level, work it off an ATR, work it to a swing point. Very simple. But be careful with it. Because if you're trying to put 10 pips in to get 30 out just because you're rigid on RR, you'll find you're stopped out more times than enough. But if you look at it from a return on investment point of view, changes the way you look at the market. And not only does it change it, it makes it pretty darn accurate. See you all in the next one.